has now reported a net loss of 8,200 crore rupees, doubling of losses from the previous year, while revenue has also doubled in the same period. But losses at twice the size of cumulative revenue is another red flag for a company whose path to profitability remains elusive. Joining me on this broadcast are two very special guests, Srinath Sridharan, policy researcher and corporate advisor, and Sriram Subramaniam, founder and MD in Govern Research. Srinath, let me start by asking you, these numbers from the BYJU'S table have been elusive all this while, and finally when data is beginning to trickle in, the figures are not looking good at all.
Not at all. I think the very fact that the numbers have been very delayed for nearly 22 months, and despite this, the sense of gloom and doom still pervades. And the conversation about them raising fresh capital to pay debts and dues is, again, I think, abysmal. The very fact that you have to raise capital to pay off what is originally a debt repayment and of sorts is worrisome. And here, I think, Karthik, as we've spoken many times, I'm just so glad that these are monies from the Florida pensioners and not the Indian pensioners of sorts.
Right.
This money is going to, I don't know whether it's going to chase good money after that, but
Yeah.
it is definitely not going to impact valuations in the further round of build a business.
Okay, so Srinath, help me understand, obviously there is this growth at all costs pressure that comes from VCs across the board. But we are right now looking at a scenario where that growth also, in terms of adding new customers, that data hasn't come in. In fact, before coming on the show, when you and I were talking, you were saying that we need to see that number, that number ticking? Is BYJU'S getting more users on its platforms? Because it seems that the edtech story, which really witnessed a boom in the COVID era, is now losing its sheen and is losing its viability as a business model altogether.
Yeah, that's true. I think BYJU'S, with its, I think, enough issues, has become the bad adjective for everything associated with EdTech. I mean, be it the brash and the bold valuations, almost to say that they would be the most valuable Indian company of sorts.
Yeah.
To go from being brash valuation to crash from that initial euphoria,
Yeah.
and then not even having the cash to pay employee salaries and vendor dues.
Right.
And now you're saying they're going to do the other one, which is to slash valuations to raise funds. I mean, so I
Right.
think it's kind of worrisome, right? I mean, you don't know whether they're adding customers. If
Right.
the customers are staying back and renewing their contracts for the subsequent year, then we can at least say that the edtech offering that they've done so far is working. So we don't know whether they're going to pour more money in the sales and marketing effort to just to keep this entire sales engine and the customer acquisition going on. And
Right.
that's a worry. And to me, more importantly, what is not spoken about, Karthik, is this, right? All the allegations around the company that have been coming over the last so many
Of
months,
course, the FEMA
nothing is closed.
violations
Everything
being
is
not
pending.
least among them. The FEMA violations not being least among them.
Correct. Nothing is closed. So whether these are the financial mishaps or the issues, they're all due.
Yeah.
And I think this is also a very desperate amount effort by the existing investors not to liquidate the company or write it off. Probably because for most of the Western investors, this is January and the new financial year has started. They
Yeah.
they might be doing their own fundraising.
Yeah.
But I think to me, this is like end of the rope somewhere there.
End of the road is a word coming in from Srinath. Sriram Subramaniam, thank you for waiting patiently. I want to actually begin by asking you, number one, $100 million to be raised at a valuation of $2 billion is in any case too little for BYJU'S to overcome all its losses and all its miseries which it is facing presently and has been facing. But I think more importantly, is there a lesson here in corporate governance in the mandated reporting at all costs and not really subjecting investors, even though you're not a listed company, you have investors, not subjecting investors to these delays after delays after delays? And do you think there is time now for maybe, if not budget 2024, some action from MCA in terms of getting these startups to comply?
Yeah, thank you again for having me on the show. I think thankfully BYJU'S is not a listed company. If it were a listed company, it would be much more, I would say, the corporate governance issues would be much more paramount.
But sir, that's
be
my
the
point.
passive-
Should norms be different for listed versus unlisted companies? The only difference being retail investors are not impacted from a company like BYJU'S, but there are
Yes.
institutional investors who in any case are subject to this misgovernance when it comes to the corporate.
No, so definitely there are already regulations in the Companies Act which allow for course of action by the institutional investors. But these institutional investors are informed institutional investors. They know how to act against a BYJU'S. They can seek to remove the directors, remove the founders. They can seek to place themselves as directors. All those mechanisms already exist in the Companies Act from
Yeah.
a corporate governance perspective. So, so that is not a challenge for the institutional investors. I will never fault the corporate governance of the current from a regulatory perspective.
Right.
See, even the provision of late filing of annual reports is allowed with fines and penalties in the corporate law. So that is also not a concern. Obviously, these are telling issues. These are red flags. There are some commentators which are saying that these type of startups which have very high valuation should have independent directors on the boards, etc. So these are, of course, forward-looking things. They don't need necessarily to be now there from
Got
a
it.
corporate governance perspective.
Right.
Two is this $100 million is largely a distress funding. There is no measure of valuation. Today,
Absolutely.
if somebody writes a check for $100 million and says, I'm going to take 20% shareholding, I think BYJU'S will agree to it, because
Right.
at the end of the day,
It doesn't
that
have a
is
choice right now.
literally
There aren't too many
life-
investors who want to look at BYJU'S. But of course, I mean, you know, the BYJU'S story has been pretty much a never-ending saga. And we thought there is another never-ending saga. Gentlemen, stay with us. But that saga seems to have finally crash-landed. I'm talking about the Zee-Sony merger, 2 years in the making, which did not go through, when on Monday, Sony Group finally called off its $10 billion merger with Zee Entertainment. Now today, Zee Entertainment Enterprises Limited stock has fallen over 33% in trade, down to just 155 rupees a piece. Upon the merger call-off of the news emerging, Zee stock fell to its lowest since August 2020. Analysts have taken a bearish position on the stock, viewing the development as a negative for the media and entertainment sector. Sriram, number one, obviously, you know, I'm not telling you to give a long-term or a short-term projection for the stock, but retail investors in Zee really hoping for some sort of a test of their patience culminating in an upside has not happened. Now, how do you see this whole M&E story in India panning out, given that Sony has completely backed off the merger and is actually looking at Zee paying them $90 million in fee?
Firstly, it's not just the retail investors, it's institutional investors also who have been
Right.
badly affected. 96% shares are held by institutional plus retail, that is the non-promoter shareholding. Probably the largest amongst any listed company from a perspective of a percentage of non-promoter shareholding. The second point is that this 90 million which Sony has sought, obviously Zee will take it to court, and already Sony has sought an arbitration proceeding, so it will be discussed in the arbitration discussions.
Right.
Thirdly, already there is, I would think, a build-up by some institutional investors towards calling a EGM, extraordinary general meeting. Corporate law allows that about 10%, anyone holding collectively more than 10% shareholders can call a EGM. So
Right.
there is a build-up towards calling a EGM, and they may demand a removal of the entire board of directors and try to replace the board. So because there is genuine angst and anger amongst institutional investors and other investors, because
Right.
at the end of the day, they were hoping that this would be a new phase for Zee, this entire merger with Sony. Sony would have put in $1.5 billion into the company. It would have created, I would say, a competitive strength to both the entities, and that calling off of the deal has not helped the listed company at all.
Absolutely. Absolutely. Srinath, if I can throw the ball in your court, I'm asking you to look at, you know, the crystal ball gaze from the outside. And as far as the entire media and entertainment, the GEC sector goes, do you think if and I'm giving you two scenarios here, and we have just about a minute or so. So if we look at the Ambanis wanting to make a foray into investing in Zee now, question one, will CCI permit that, given that the deal with Disney is already on the table? And the other being that if not Ambani, then is Adani the only next obvious bet, or is there a third player also?
Yeah, I think the markets have been speculating as if Adani's have already done the deal. Today we saw some tweets from known analysts closer to the faction tweeting about it very cryptically. So, but for Adani and Ambani, whose media interests are very, very strong, let's not rule out the Birlas, Kumaramangam Birla group, as well as Sanjeev Goenka. They all have, in the past, as well as had presence in the media business and looking forward.
Right.
And as the Indian consumption economy grows, one needs to have some foothold in the media business.
All right. Well, we'll leave it at that. Some foothold in the Indian media business is the word coming in. Gentlemen, thank you so much for joining us on these two very important stories today. Of course, we'll keep coming back to you as and when the news develops. But it's time for a very short break right now, right here on News 9 Live. Up next, Budget for Bharat. We shine the spotlight on the semiconductor industry. That and more after a very short break. Stay with us.
Pakistani spy agency ISI's sinister plan to target India. Training women to honey trap top civil and military officials. Counter honey trapping ops initiated by India. But gullible victims still caught in the web. Top military intelligence experts break down the web of deception. Colonel Hani Bakshi explains the phenomena of honey trap.
जहाँ पे भी आपको लगेगा, उनको लगेगा कि there is a person who is susceptible to women, who's making a lot of women friends on the social media. That is where they will make a spoof account and then start luring the person.
Colonel Pavitran Rajan decodes the psyche of the victim and the predator.
But when you go up the chain, no one enforces it to people at the top. That disciplinary regime and the security regime is not enforced at the top. And they usually have a public profile where it is much more easier to approach that person.
A News 9 special on how modern technology has added teeth to the ancient spying tactic.
Our story takes you inside Pakistan's honey trap machine.
This and more, streaming on world's first news OTT, News 9 Plus. Download now.
You're watching our special pre-budget coverage, Budget for Bharat. Today, we shine the spotlight on a sector that's poised to emerge as a true alternative to the world, as the demand for everything from smartphones to electronics all ride on this very piece of fine engineering. Of course, I'm talking about the semiconductor industry that has seen interest from global players like Micron and domestic players ranging from Tata Group to Vedanta and Hiranandani Group to HCL, all taking a leap of faith in this sunshine industry, linked very closely to India's semiconductor race to the top, where the government has already earmarked 76,000 crore rupees, is India's dream of also becoming an artificial intelligence powerhouse. Will Budget 2024 add new wings to these emerging sectors? And if so, what does the industry really want? Joining me to discuss this, Ashok Chandak, President IESA, and Manish Maheshwari, co-founder Fanery. Mr. Chandak, if I can start by asking you, there is of course a wish list which the semiconductor industry has, but a lot has already been delivered to the semiconductor industry by way of the 76,000 crore rupee outlay. Not a lot of that has yet been consumed. What are your specific expectations from Finance Minister Nirmala Sitharaman on 1st of February?
Thank you for having me on the show. And yes, that's right. Agree. Government has given a very good support. The 70,000 crore was allocated, not fully utilized yet. But we have still high hopes in upcoming budget because semiconductor industry is also pretty complex and a very huge ecosystem. There are various facets of it. We are just at the beginning of this actually. So if you look at the overall semiconductor market in India, which is almost $40 billion consumption in the country, expected to grow to $100 billion in 2030. It's a huge number. And still a lot of that is being used as a imports and not more of the local sourcing. So there is a huge opportunity for semiconductor which to be consumed in India as well as to be deployed for the global market. So with this, the expectations are still high, both on the semiconductor manufacturing, which includes the foundry services as well as the ATMP or outsourced assembly test capacity,
Right.
as well as on design and research.
Okay.
And I would say design and research is where there is still a huge scope for additional funding support because these are more of the long-term topics,
Yeah.
which will going to feed back into the semiconductor manufacturing and assembly activity going forward.
Absolutely. Manish Maheshwari, if I can bring that point off to you. So design-led innovation, design-led manufacturing is a word coming in from Mr. Chandak. But what does that really entail? What should be the focus of the government? Are we looking at new curriculum in colleges? Are we looking at new specializations at IITs and other engineering schools? What is going to really foster this entire design ecosystem, given the fact that manufacturing in any case is happening in Taiwan? Manufacturing may, with some partnerships, offset its roots somehow into Indian states as well. But if design-led innovation is what we are talking about, where does it begin and what can budget do about it?
So let me make a broad point at a higher level, right? Which is basically that in technology and any kind of other things that you're talking about, semiconductors, things at the lower order will become commodity, right? So then either you have to be the lowest cost manufacturer to have value, or you have to move to higher order activities, which is basically a design and sort of, even on technology side, I mean, you have to be the one to think about what is a product innovation versus simply making or coding the software. The same happens here as well. Now, what does that require? That requires a different mindset. That requires a mindset about, okay, do we really understand the customer problem? Are we able to take risk? And our curriculum and our education has to support more of entrepreneurship, more of higher order thinking, being more understanding of the customer need. Because we have been very good, if you think about it, on the coding side of things, when specifications are given to us. And on the manufacturing side, we had our own problems because of the logistics and infrastructure. But hopefully the logistic infrastructure is sort of taken care of, right? So we do have a good shot at manufacturing. Yeah. But very soon that would also become commodity. So I think in my view, yes. I mean, we have to focus on 2 or 3 things. One is a mindset shift, which is what also the government is trying to do about, this digital India and innovation and startup India that they are doing. Yeah. Our curriculum also has to sort of be upgraded and more in line with the needs of the industry and the market. We cannot just have the same old curriculum, which is like rooted in 20 years ago or 30 years ago. The world has completely changed. Right. And third is, of course, the ecosystem and government support has to be conducive enough where people are willing to take risk and try something different, try things of the higher order. So right. Those are the things, in my view, is what we'll have to focus on, and the budget should also encourage those things.
All right. So hold your thought there, Manish. Mr. Chandak, if I can come back to you on this. Now, of course, there is interesting data on India's overall rise when it comes to electronics exports, India's overall rise when it comes to semiconductors as an industry being set up, and the initiatives taken by the government and by the private sector, as well as the global players coming in. Throw some light on these numbers. What is the kind of vision that you have right now as president of IESA for India's overall electronics export basket, not just smartphones, but electronics of all kinds rising in coming years?
So there are 2 factors here you asked for, electronics and semiconductor, and let me address both of them. First of all, the electronics market in the country today, as we count 2023, is about $180 billion. And it is expected to increase to about 300 billion plus by 26-27. And bulk of this growth is coming through exports, not only mobile phones. We should see the other sectors also contributing to the export activities. Now, along with this electronics, obviously there is a need for semiconductors because that's the backbone and that's the basic fulcrum. And which I, as mentioned, $100 billion is the expectation of the semiconductor market by 24. And there is a huge scope of export over there.
Okay.
And my view is actually these things will continue to grow, provided the design, and I'm coming back to that actually, that acceleration of the design-led manufacturing is going to be very, very crucial for India. As Mr. Maheshwari mentioned, the commoditization, that marketplace is not where India can really play or
Okay.
add value.
Okay.
It's more of the high volume. You produce billions and billions of pieces per day. That is not where we are going to make any value addition. And if we are to be very successful in the global market, it's all design as well as the value addition, which is very, very important.
Right.
And this is where organizations like IESA, which is the industry body, we are working very closely with the industry constituents, including the government, including we are holding 2-day event this week as we speak to
Right.
deliberate on these activities of design-led manufacturing and come up with additional recommendations to both central as well as the various state governments as what can be done more so that we tap that $100 billion of upcoming market in the semiconductors and also tap that $300 billion of the electronics market, which is happening by 26, 27. So pie is big enough, I would call. Several players, both Indian conglomerate as well as the global guys, several startup and MSMEs are showing huge amount of interest.
Yeah.
Entrepreneurs are willing to take the risk. And I would see that the additional support as well as the motivation from the government is going to be very, very important to take this fast track acceleration of design-led manufacturing.
All right, design-led manufacturing seems to be the obvious focus here from the semiconductor industry. But Manish Maheshwari, I think when Mr. Chandak is talking about numbers of $100 billion worth of semiconductor exports, $300 billion worth of electronics exports, there is another full animal out there called artificial intelligence, which is likely to add about $1 trillion to India's economy by 2030 to 2035. And this from a statement issued by Rajiv Chandrasekhar a few months ago. The bedrock of artificial intelligence is the chips that power it, and those chips are in fact semiconductors themselves, disguising themselves in multiple augmentations to become those GPUs. So talk to us about the artificial intelligence industry, and are there specific budget expectations, budget related expectations for the AI sector? I understand AI regulations may not make it to the budget speech. I understand Digital India Act may not make it to the budget speech. But what is it that the AI industry, a nascent industry in India, needs to reach that $1 trillion figure?
Yeah, no, very good question. And AI is a game changer, I would say that. I mean, whatever we have seen so far, I think everything is going to be very different as AI becomes mainstream. And it is going to be the next phase of growth for technology. Now, for AI to work, of course, you need not just the semiconductors and the infrastructure, you also need the data centers because it works on large amount of data, and then you need the skill set, people
Right.
who are talented enough to understand this and sort of build new models and also make the models work for human betterment. And the other aspect, of course, which you touched upon is the regulation. Like, how do we make sure that it is done in the ethical way,
Right.
and there are enough regulations and ethical guardrails to deal with it, right? So let's talk about each of them one by one. So on the data center, clearly, given the projected growth, India has a very good chance to sort of be the place where large companies would want to store their data and access the data. And also regulation-wise, India has made it mandatory that the data about Indian people should be based in India. So that would mean that the data center...
Absolutely.
would
So
be
from a
big area
DPDP
of growth.
perspective, from announcements already made by players including Reliance Industries about a data center being built in India, and many other players actually now jumping the fray, obviously data center does seem to be one priority for India right now when it comes to securing the data of users. But what can Budget 2024 specifically do to incentivize data storage by way of data centers here in India?
Yeah, so I think that would require a financial incentive, number one, and also,
So
making
what
the
kind of an
regulation-
incentive do you have in mind here?
Yeah, so data center requires a couple of things, right? One is like location and space, and also electricity and sort of the relevant skill sets to run those data centers. So I think clearly, if you look in the US, states that subsidize data center, I mean, they saw that a lot of these tech companies, made them the hub for data centers. And that requires like subsidized electricity, subsidized infrastructure, so that, these huge amount of data can be stored at a very low cost, right? So that's one. So financial incentives around infrastructure of data centers. Number two would be, I would say, other than data centers, for AI to take off, clearly we have to promote entrepreneurship in AI. I mean, that would require, I mean, all the things about on the startup side, which is how we can incentivize startups in the area of AI. How do we promote those entrepreneurs? How do we make sure that they have the right mechanism in terms of tax benefits, grant, incentives, investments? So that is another big phase of growth. Because what you don't want is that, big companies in the US and those in the Bay Area determine the base models, and Indian startups are simply working on the fringes and are dependent on them, because that would again mean that the center of control would lie outside India. So what we have to do is we have to do things in India. And I think companies like ours, Fenori is an AI company as well. So we are doing a lot of stuff in the area of creator-based AI. So we feel that there is a lot of scope for AI models to develop, which are relevant and conducive for the Indian audience, and also when I take into account the nuances of the data in India, including local language content and also visual content, which is very relevant to India. So I think those are the things I believe if the government can give more support to that, both in terms of pushing in the new Digital India bill, as well as the financial incentive in the upcoming union budget.
All right. Well, that is the word coming in from Manish Maheshwari. Mr. Chandak, before I let you go, my final question to you: how do you help the government of India, the finance minister, prioritize this entire large ecosystem, which begins with semiconductors, goes all the way to artificial intelligence, and perhaps beyond, things that we don't know of yet? How would you help the government prioritize which is top priority right now for the government of India, something that should definitely make it to the budget speech of finance minister? And then going forward, in the month of July, when the final budget, the full budget is presented, how would you help prioritize these 2-3 areas which both of you have so eloquently delivered today?
Yeah, thanks. Good question. I just want to clarify the numbers mentioned by me are the total market actually, the $100 billion 2030, it's a semiconductor market, not the export. Export may be about 40-50% of that. And the electronics market, I mentioned $300 billion by 26-27. Again, is the total market size, not the full export. Yeah. Then number two, on coming back to your question, yes, I think what we have to look at the two things here. Number one is creating the demand, and number two is filling that demand. Now, creating the demand means that electronics consumption in the country, the computing consumption, including the data center you just mentioned. Now, currently there is a PLI which is running for IT hardware, which is about 7,300 crore. I would say it is not good enough from the data center perspective. What needs to be done is how do we create the demand to have the localization of the data center? One is obviously create the conducive policy so that people do set up the data centers, but also that data storage. Right now, there are a lot of data which is being stored outside of the country. If entire things becomes regulated and then everything gets stored in the country, then I think the things are quite different. And then we can leverage that as a data center for the world, not only for India. Like there are several countries, as you know, they are already running the data centers, and these are data centers for the world. And that's a big opportunity.
Absolutely.
And I know that particularly when I hear some of the conversations with the Minister of State, Mr. Rajiv Chandrasekhar, he's also very well clear, and I think government is definitely working on this data center topic.
All right.
In terms of the prioritization, obviously both the ends to be done, but my view is rather than only looking at the domestic consumption as a demand, we to look at the global markets.
Right.
Once we keep global markets into mind, we see that the pie is very huge and very big, and that would really allow additional outlay as a support the policies and the regulatory topic. So what do we do as an industry body? I think we work very closely now with the central government, including the state governments. So for example, IESA as an industry body has been working with several governments, be it Karnataka, be it Odisha, Madhya Pradesh, UP, as well as the other states, to provide them inputs so that they develop the right conducive policy to attract those investors, provide that business-friendly environment so that the various companies and entrepreneurs, they start to do the developments. And that is the priority number one. That, there is a buzz, and you would see that there is already a buzz. Several states have already come out with the policies, and we have given a lot of inputs to them. Same thing on the central government side. Now, the most important thing would be the various schemes those have been rolled out. Those need to be, deployed, executed, and the funding has to be made available, and then go to the next phase.
Absolutely.
So to my perspective, that is already actually that get acceleration done. Micron is one. There are several other names. Those are popping up like Tata and HCL. I think it's just the beginning.
It's just the
beginning. To see such 10-20 more announcement and activities, and then the things would start rolling out. And the other countries, those who have taken a lead about 10-20 years ago, I think India would be at a similar stage in 5 to 10 years time frame.
Got it. Well, of course, very valid concerns and suggestions there by Mr. Ashok Chandak as well as Manish Maheshwari. Gentlemen, I'm afraid we've completely run out of time, but thank you so much for your inputs here. And we hope a lot of this does make it, if not to the February 1st speech of Finance Minister Nirmala Sitharaman, then of the speech of the Finance Minister of India when the new government takes office and presents the budget in the month of July. Thank you so much for being with us here on Budget for Bharat. And with that, it's a wrap from me, Karthik Malhotra, signing off. Thank you so much for watching. Goodbye.